A historic entry point, diminishing risks, and future prospects. Michael Saylor, the former CEO of MicroStrategy, believes that Bitcoin is currently at a historic entry point. He argues that many of the risks that previously plagued the cryptocurrency have significantly diminished. This makes it an attractive investment opportunity for both institutional and individual investors. Saylor predicts that Bitcoin's price will surge dramatically when the current risk-averse sentiment in the market shifts. One of the key risks that have diminished is regulatory uncertainty. Governments around the world are now taking a more favorable stance towards cryptocurrencies. This provides greater clarity and stability for investors. Additionally, the underlying technology behind Bitcoin, blockchain technology, has also matured significantly. This has led to increased security and scalability, addressing earlier concerns about its viability. Furthermore, Bitcoin has gained wider acceptance as a legitimate asset class. Major financial institutions, including banks and payment processors, are now offering Bitcoin-related services. This growing institutional adoption is a strong indicator of Bitcoin's increasing legitimacy and future potential. As more investors recognize these factors, Saylor believes that demand for Bitcoin will surge, driving its price upwards. His prediction is based on the premise that Bitcoin's scarcity, coupled with its growing adoption, will inevitably lead to a supply-demand imbalance. This will create upward pressure on its price, potentially leading to significant returns for early investors. However, it's important to note that investing in cryptocurrencies, including Bitcoin, carries inherent risks. Market volatility, regulatory changes, and technological advancements can all impact its price. Investors should carefully consider these factors and their own risk tolerance before making any investment decisions. Institutional embrace Wall Street, government, and the RIA dilemma. The institutional adoption of Bitcoin is seen as a crucial catalyst for its mainstream acceptance and price appreciation. Michael Saylor predicts that both Wall Street and the US government are poised to embrace Bitcoin in a more significant way. This would represent a watershed moment for the cryptocurrency, potentially propelling it to new heights. Wall Street, with its vast financial resources and influence, has the potential to drive significant demand for Bitcoin. Major banks are already exploring ways to offer custody services and trading platforms for cryptocurrencies. The entry of institutional investors, with their stringent risk management practices and long-term investment horizons, could bring much-needed stability to the often volatile cryptocurrency markets. The US government's stance on Bitcoin is also evolving. While initially apprehensive, government agencies are now exploring the potential benefits of blockchain technology and cryptocurrencies. The recent seizure of Bitcoin by law enforcement agencies, coupled with statements from government officials suggesting a more open approach, indicates a potential shift in policy. However, despite the growing acceptance of Bitcoin, registered investment advisors, RIAs, remain hesitant. Many RIAs are bound by fiduciary duty, requiring them to act in the best interests of their clients. Concerns about Bitcoin's volatility, regulatory uncertainty, and suitability for their clients' portfolios have prevented many RIAs from recommending Bitcoin as an investment. This hesitancy highlights the importance of addressing these concerns to facilitate wider institutional adoption. Presidential backing. An unprecedented endorsement for Bitcoin. Bitcoin's journey has been marked by both skepticism and enthusiasm. However, it has received unprecedented support from a sitting US president, a development that has significant implications for its future. This endorsement carries immense weight, potentially influencing public perception, policy decisions, and institutional adoption. No other asset class has enjoyed such high-level backing, underscoring Bitcoin's growing legitimacy and potential. This support is particularly noteworthy given the historical reluctance of governments to endorse emerging technologies, especially those that challenge the existing financial system. The president's endorsement is seen as a signal of the government's willingness to embrace innovation and potentially integrate Bitcoin into the existing financial infrastructure. This endorsement could pave the way for a more favorable regulatory environment for Bitcoin and other cryptocurrencies. It could also encourage more traditional financial institutions to enter the market, providing investors with greater access and liquidity. Moreover, the president's positive stance on Bitcoin could influence other governments around the world to adopt a more open approach. This could lead to a global regulatory framework that fosters innovation while mitigating risks, further bolstering Bitcoin's legitimacy and adoption. Section 4. MicroStrategy's bet. A Bitcoin citadel in the corporate world, MicroStrategy, a business intelligence firm, has emerged as a major player in the Bitcoin market. The company, led by Bitcoin proponent Michael Saylor, has accumulated a significant amount of Bitcoin, making it one of the largest publicly traded corporate holders of the cryptocurrency. This bold move has attracted both praise and criticism, highlighting the growing debate surrounding Bitcoin as a corporate treasury asset. MicroStrategy's Bitcoin holdings are seen by some as a strategic investment, a hedge against inflation and the potential devaluation of fiat currencies. Saylor argues that Bitcoin represents a superior store of value compared to traditional assets like cash and bonds. He believes that Bitcoin's limited supply, decentralized nature, and growing adoption make it an attractive long-term investment. However, critics argue that MicroStrategy's Bitcoin bet is too risky. They point to Bitcoin's volatility and the lack of regulatory clarity as potential threats to the company's financial stability. Despite these concerns, MicroStrategy's actions have inspired other companies to consider adding Bitcoin to their balance sheets. This trend, if it continues, could further legitimize Bitcoin as a corporate treasury asset, potentially driving further institutional demand. However, it's important to note that investing in Bitcoin remains a highly speculative strategy, especially for corporations. Companies need to carefully weigh the risks and potential rewards before making such a significant investment. Section 5. Charting the course. Navigating Bitcoin's price action and future potential. Bitcoin's price has been on a roller coaster ride since its inception, experiencing periods of rapid growth followed by sharp corrections. Understanding the factors that influence its price is crucial for investors seeking to navigate this volatile market. Technical analysis, which focuses on chart patterns and trading indicators, can provide insights into short-term price movements. Key support and resistance levels, identified by analyzing historical price data, can help traders identify potential entry and exit points. Moving averages, which smooth out price fluctuations, can be used to identify trends and potential trend reversals. Fundamental analysis, on the other hand, focuses on the underlying factors that drive Bitcoin's value. These factors include adoption rates, regulatory developments, technological advancements, and macroeconomic conditions. For example, increased institutional adoption, favorable regulations, and growing awareness of Bitcoin's potential as a hedge against inflation are all considered bullish factors that could drive its price higher. Conversely, negative news regarding security breaches, government crackdowns, and macroeconomic uncertainty could trigger selling pressure, leading to price declines. It's important to note that Bitcoin's price is influenced by a complex interplay of these technical and fundamental factors. Investors should consider both short-term price movements and long-term fundamental trends when making investment decisions.